Hey, what's going on, everybody? It's Brandon Lindsay, and in this video, I want to cover how owner-operators are taxed. This is a popular question that's out there, and I actually get this question from clients quite a bit. So I thought I'd make a video just to share with you guys, and hopefully you find it helpful. Now let's get straight to the video. So if you are a company driver, taxes are fairly straightforward. They can be fairly simple. You're an employee. You have taxes withheld from your paycheck whenever you get paid. And then at the end of the year, you get a W-2. The W-2, that's your income. You get your taxes done. You file a 1040. It's a fairly straightforward process. Now, as an owner-operator, in the eyes of the IRS, you are now a business. So congratulations, you're up and running and you got your trucking company going. That's a huge accomplishment. So you're a business owner. So now with that, there just comes a little bit more responsibilities and a few more steps to get your taxes done now. Now, most owner operators, when they get started, they're not on payroll. So there is no W-2 that they receive at the end of the year, and there are no taxes withheld and sent anywhere. For most owner operators, for all the owner operators, your income that you report to the IRS is now the profits from the business. Now remember, as a company driver, your income was just a W-2. So as an owner operator now, the income that you report to the IRS is now the business profits from your trucking company. Now, what are the business profits? So those are all that's the revenue that your business generated this year, minus all the expenses that your company spent this year. That's your profit. And now you're going to be paying taxes as an owner operator. Now you're going to be paying taxes based off the profit of your business. Now, you're still going to file, let me back up for a second. Now, if you are a one owner company, like your company is just owned by one person and you have not elected or ask the IRS to be taxed differently, you're going to file a 1040, but with that 1040, you're going to attach a Schedule C. A Schedule C is a profit or loss from business. That's where you're going to report all the revenue and all the expenses that your company generated that year. So here's an example of some of the information you could put on your Schedule C. So it's information like how much revenue the company made and then what you spent on, fuel, repairs and maintenance, insurance, and some of those things. So you report to the IRS what that number is, the revenue minus the expenses. And let's say that number comes up to be $56,000. That $56,000 business profit number, that's the number that you're paying taxes on. You're going to be paying income taxes on that number, but you're also going to be paying self-employment taxes on that number as well. That's the Social Security and that's the Medicare. So here's some things to think about. You really need to have a good idea of how you're going to keep track of all your revenue, how you're going to keep track of all your expenses throughout the year. Are you going to be using a notebook to keep track of all this? Are you going to be using like an Excel spreadsheet or Google Sheets? Are you going to be using QuickBooks? Are you going to be working with an accountant that's going over this stuff with you? Those are four different ways you can get your information summarized, but you got to really think through that process, because if not, and I see this a lot, you could go through the year, come up with a big number like this and totally not be aware of how much that tax is going to be on that number. So then you're dealing with a large tax bill. So you definitely don't want to do that. And to avoid having a large tax bill, one of the things that you could do is make quarterly estimated tax payments. But in order to do the quarterlies, you at least got to have a good idea of how the business is performing, like how much profit the business is making. You need to know that information. And it's always good to know this kind of information because it gives you the ability to make decisions. You need to be able to make decisions based off the data. And the data is your data. It's important and you should know it for your business. So I just wanted to put together a quick video that explained how owner operators are taxed. If you got any questions, leave them in the comment section below. If you like the video and you like the content, please like the video and share and subscribe. Thanks for watching.